Assalamu alaikum and welcome traders to my channel. Today I'm going to provide you the weekly market review and the previous week recap of the market. As you know, we always start from gold. So let's start this week weekly recap from gold. If you see, gold has taken out important liquidity on a higher time frame. This was our important liquidity. This is all-time high in gold as well. So we can expect, and we expected a reaction from the market, which you can see here clearly. This was a nice trade on Monday, then again selling down, retracement, selling down to the order block, the daily order block plus fair value gap as here. Again, market pushed to the upside because in daily time frame our structure is definitely a buy side, our trend is on buy side. So we definitely expected this kind of reaction in the market. Then again, we had this sell after liquidity sweep and we still have this breaker intact. So that was the forecast, which as you if you watch the last analysis video about, I think it was about CPI, our weekly analysis, you will see that we said that market is trying to this will be the drawn liquidity for the market, and market can tap this fair value gap, but market has left behind the liquidity, just respected the order block over here, plus it was also a fair value gap as well, but this order block in gold was respected very much nicely, and you can see a reaction in gold because gold is highly volatile pair. That's why it gave us such a high reaction, such a volatile reaction. Again, this was our sell. We enter for selling side for selling trades over here. If you drill down in low time frame, in 1 inch time frame, what we see here, at that point we sold gold from these points last week or the previous week. Then again at this point we had a change in character in 15-minute time frame at this point. Then again this was confirmed in H1 time frame as well. This was, although I did not enter in this buy trade, and I then waited for this sell trade, and again somewhere buy from this over here, or it was a buy from this level and sold from this again. If you look in daily time frame, in H1 time frame, so basically this is a level which is a daily time frame order block, a daily time frame reference. So at daily time frame reference we will need a structure shift in 15-minute time frame. If you switch the 15-minute time frame over here, this was a weak structure shift in 15-minute time frame at that point. If you check it out, not a good structural shift, and we sold from top over here somewhere from this zone. Then I think this was our CPI time, maybe if I'm not wrong. By the way, it was a high volume, high volatility news. Then when the price tapped our daily order block, you can see this is clearly a consolidation. Just above consolidation, just below consolidation, market came down aggressively to this our daily time frame order block, gave a strong reaction, although it was a strong reaction from this zone, but it was more of a liquidity sweep. If you look at this level, that's why we shorted from this price as well. There was a 15-minute PDRA for us, 5-minute and 15-minute PDRAs in, if I'm not wrong, in this zone over here. So we sold from this price and again waited for our next entry. At that point, this was a structural buy. If you look at this 15-minute time frame, the 15-minute high has been broken down. So if our 15-minute high is broken down, what do we have? We will wait for the inducement to be taken out. Price has taken out inducement at this point. No, it has not taken out the inducement. This was our inducement over here in 15-minute time frame, because I say that find a daily time frame reference and wait for the 15-minute structure shift. So if you see a structure shift in 15 minutes, this is inducement, and just below the inducement, you will have to mark the immediate fair value gap. This is the fair value gap plus this is the fair value gap. So these two are were the fair value gaps in 15-minute time frames. Market has given a reaction at that, and there was an FOMC as well. So it was a very huge move. Then again, our structure is now bullish in 15-minute time frame. What do we have here? As you can see this line over here, this is the 1H and 4H as liquidity. This line over here, this is the entire liquidity over here. Okay, so if it's liquidity, what do we have here? We will look for a reaction in 5-minute time frame. It's H1 liquidity over here, fair value gaps. So we will look for the reaction in 5-minute time frame, and we did that. A 5-minute time frame, 15-minute time frame structure is bullish. Break of structure to upside, price came down, taken out the 55-minute low plus M15 inducement. If you look at exactly, this was our 15-minute inducement plus this was our 15-minute inducement and 5-minute low. Just below it, our odd block, proportion block, and a nice trade we entered in from this zone over here after this rejection and a confirmation in 5-minute time frame as well. This was a trade we ride up, then again to the downside. So as the price taken out this important liquidity over here, we will expect the market to flip its direction. So if it is 15-minute inducement, it will act like a change of character. This inducement will act like a change of character for the market. And you saw that 1, 2, 3 mitigated M5 extreme POI and reaction to the downside. Sweep the low, have some reaction if you check it out in 5-minute time frame. This is the exact picture for you. Buy from this zone over here after this overblock confirmed. A nice buy, 120 to 30 pips move from this range over here, 140 pips move, and again sell down, sold out price, extremely oversold at this point, then trying to be overbought because we will have to tap our extreme POI in the premium. Price tapped into the premium, farm up some kind of liquidity and then reaction to the downside. Then this is the 5-minute breaker. Price expected breaker as well, and now to the downside. So if we did like gold has played out exactly according to our analysis of the last week. If we look at the GBP US dollar, so you might know that last week we said that in 4H time frame, we predicted that GBPUSD is aiming to sweep all the liquidity above it. And I said that I want to see the market sweep this liquidity again, this liquidity again. You can see liquidity swept again. We are in 4H order block plus daily demand zone as well. And you have see this market first swept the liquidity, then again came back to hunt for the liquidity from the sell side and a reaction. This was quite obvious and you have witnessed it. So now if you look at 1H time frame, clear cut accumulation or consolidation, price just swept the liquidity, shifted the 50-minute structure and boom to the upside. It will not give you a chance to enter in the trade as well. So at this point, where do we have a change in shift in structure? 1, 2, 3. This is not a 3, but this is a 3. So it's internal structure shift. Then price just came back to sweep this liquidity. It's a rule which we study in internal structure marking, and it's kind of very important rule. You have to know that if you want to mark the structure correctly. So that was the forecast for GBPUSD in our last week analysis video, and Alhamdulillah market played out exactly as we anticipated it. Switching into euro. Euro was always also on a weekly time frame order block. So it was a very important area for us. Switching into daily forest time frame, we said that we want the price to sweep the low. At this point, euro swept the low, and again at this point, GBP again swept the low, but euro didn't. That's also a rule, uh, a smart money tool, which is called a smart money tool. So in this case, euro will not have to sweep the low because GBP has already swept the low, and you will see the structure shift 1, 2, 3 in H4 time frame. First, it swept the low high, gave a trade, a nice trade. You will get one at 1H time frame, a nice trade as well. Swept the high. It because that was all the liquidity. 100 pip trade or 60 pip trade from here. Then already it has already shifted the structure from this zone over here. 1, 2, 3. That was also a structure shift as well, and you have seen the reaction in FOMC. It just left the highs in H1 because, as I said, GBP has already taken out the high, so it is not necessary for euro to take up the high. And EURUSD, GBPUSD, gold all played out exactly as we anticipated last week. And of course, you are welcome to join the group because on YouTube I cannot post everyday analysis and everyday intraday analysis. So in our groups, I try to share my thoughts, my perspectives on the market. That's all for today's video. Thank you very much for watching the video. Make sure you are subscribed to the channel in order to get the latest updates. Thank you very much and safe trading.